All right. So if you remember back in chapter 2, we covered the different types of business structures. So if someone wants to start a business, they have several different options in terms of how to structure that business. They could structure it as a sole proprietorship if it's just one individual. They could structure it as a partnership if it's more than one individual, or as a corporation for any number of individuals. Right? We talked about sole proprietorship and partnership in chapter 2. We're really focusing on that corporate formation in chapter 14. So corporate formation, those corporations can be privately held or publicly held, right? It just depends on if that corporation wants to have all of the owners be individuals that they are aware of, right? They usually restrict it to the original founders of the company. Or if they're trying to raise a lot of money, they'll go with that public formation and sell the shares of stock to any interested member in the public marketplace. All right. Now, in order for a company to structure themselves as a corporation, they have to take several steps. The first is decide on the state in which they want to incorporate. Decide on the state. They're going to want to choose a state that offers them some sort of advantage. So usually they're looking for the more favorable corporate tax rate or legal systems. A favorite state for incorporation is Delaware. Most of your large companies are incorporated in Delaware because they offer both favorable corporate tax rates, and they have a law system called chancery courts that tend to be very favorable towards corporations. So after they've decided on that state, then they must submit an application requesting for this status. That application is called Articles of Incorporation. The state will review it, either approve it or deny it. If it is approved, the state will issue that company what's called a corporate charter. This corporate charter contains important information, especially for us as the accountants. It's going to include the maximum number of shares permitted to be issued. Okay, because if we're selling off those shares either to individuals we know or in the public marketplace, we need to know what's our cap, what's the most that we can sell. So that information will be found in the corporate charter. Also, the par value per share. So what is the par value per share? It is simply an assigned value, And this assigned value represents the minimum sales price. And maybe because of that fact, the par value is usually very low. For example, I think Google's par value, I might be missing a zero here, but it is a very small amount per share. It's either 4 or 5 zeros before that one. So it is a very small value because it represents the minimum sales price this company can sell that share of stock to, either publicly or privately, to raise funds. It's the minimum they can sell it for. Obviously, Google stock is selling far above that amount. That's just the minimum they can take for it. The other thing that the corporate charter will tell us is the classes of stock. And so if a company just has one class of stock, that's called common stock. All the shareholders have the same rights under common stock. If a company requests for a second class of stock, it could be anything, right? Like Google has class A stock, class B stock, class C stock. So it could be anything. So that's why we're going to really focus on common stock. But the other common type of preferred, the other normal type, I don't want to say common again, the other regular type of a class that a company might request is what's called preferred stock. Preferred stock just means that they have a preference over common stock, common shareholders, right? Your common shareholders in one or more areas. Usually that's with respect to dividends. Usually they will get a stated dividend amount. And obviously they're first in line to get their dividends before common stockholders get their dividends. But as I mentioned, we will focus on common stock since all corporations have to have at least common stock. We'll focus on stock that has a par value, and obviously on corporations and public corporations at that. So that'll be our focus for this chapter.